It's time now for the word on Wall Street. Top investors watching your money. Joining me now is Key Advisors Wealth Management CEO Eddie Ghabour. Also with us is Luke Lloyd this morning. Eddie, great to see you. Thank you for joining the conversation.
Yeah.
I want to get your assessment on markets here on the heels of the activity over the weekend. The U.S. struck 3 nuclear sites on Saturday in Operation Midnight Hammer. Iran is now vowing retaliation, exchanging missiles with Israel this morning, threatening to escalate this further. Homeland Security is warning of heightened threats here at home, with Iran's foreign minister meeting with Russian officials in Moscow, saying that Tehran is considering all options. Israel taking hits in Tel Aviv and in Haifa, halting air traffic control while workers are taking shelter. But Israel's markets have moved in the other way. The Tel Aviv 125 index is up for 5 straight weeks, rallying again yesterday, outperforming all other global peers, despite this rising tension. Eddie, what do you think about that?
I think the markets are speaking very loudly that we are safer today because nuclear weapons are out of the picture here in the short term. Yeah. And I think it also points to the fact on how resilient this market really is. So any dips that we get through escalation, and you should expect that, should be bought aggressively, in my opinion, because this bull market that's been so hated, in our opinion, is going to continue to accelerate in the back half of this year.
I tell you, Eddie, that was what my thought was over the weekend as well. And I was talking to various people, and people were saying, wait, well, you know, we're talking about geopolitical worry. I mean, you know, I would imagine the stock market would go down. I said, no, I think you just took out an incredible threat. I see it the other way, and yet markets are down today. So I don't know. Luke, how do you see it? I mean, a minute ago I said it all lands on oil, and that is a major factor, isn't it, Luke? Oil prices are up from the lows, certainly. This morning, though, not a major reaction, up 1.5% right now, right below 75. When does this become a real problem, Luke?
It becomes...
Yeah, go ahead.
It becomes a real problem when they shut down the Strait of Hormuz, which I think they probably will. If you look at the poly markets, which is actually the betting odds, which is crazy, you can bet on something like this, but the betting odds have it at 55% that the strait's going to be closed at some point by the time of this year. I'm in the camp that oil is probably going to go to $90 a barrel at some point in the near future. But look, if you can go back to 1979, again, the Iranian Revolution, 1980, Iran-Iraq War, 2006 to 2012, the sanctions put on Iran. So all of that, you can speculate on oil, you can speculate on the markets, which typically decline a little bit on these tensions, then come up pretty quickly afterwards. But what is given and constant in all of that, instead of speculating, betting on a sure thing, is that defense stocks tend to do very well, which is why my clients own Lockheed Martin. Why Lockheed Martin instead of the others? Well, Lockheed Martin has a great balance sheet. They deliver more dollars per profitability for the revenue they bring in compared to something like Raytheon, and they don't have as many debt issues as some of the defense stocks out there. So I think defense stocks are a great place to be, figuratively and literally, because of the escalation that might come because Iran exports 80% of their oil to China, and the China-U.S. negotiations could be hindered by that. And if that happens, we saw what happened in March and April when tariffs go back up. The stock market declines pretty quickly.
Well, I mean, I think that makes a lot of sense to me, actually, Luke, because it's not just about tensions in the Middle East or rattling energy markets and the threats are rising, or that Iran is threatening to shut the Strait of Hormuz with its parliament backing the move. But it's also the fact that President Trump's policy is about protecting America. He's talking about spending money on the Golden Dome. He's talking about increasing defense spending. I mean, this Hormuz situation, though, remains uncertain. I mean, this is a critical shipping lane. It moves 20% of the world's oil, including most of Iran's exports to China. And that is exactly where the Secretary of State, Marco Rubio, went when I asked him about it yesterday on Sunday Morning Futures. Watch. Do you expect Iran to move to close the Strait of Hormuz to try to disrupt oil transportation across the world?
Well, I encourage the Chinese government in Beijing to call them about that, because they heavily depend on the Straits of Hormuz for their oil. If they do that, it'll be another terrible mistake. It's economic suicide for them if they do it. And we retain options to deal with that. But other countries should be looking at that as well. It would hurt other countries' economies a lot worse than ours. It would be, I think, a massive escalation.
So it would be a massive escalation. It would significantly disrupt oil and gas trade. Brent is already up about 20% this month, on track for the biggest monthly gain since the pandemic. Former Deputy National Security Advisor Victoria Coates told me, though, hold on, Iran's threat does not carry the same weight as it once did. Watch this.
The Iranians have very few cards, and the one that really stands out for me is this threat to close the Strait of Hormuz, where all the oil tankers go in and out. We had a week earlier in June when the United States did not import a single barrel of oil from Saudi Arabia. That's only happened once in the last half century. That's because of the shale revolution and President Trump's policies during the first term. So it's not a kill switch in the hands of the Ayatollahs anymore. This is a card that President Trump can play.
So America imported no oil from Saudi Arabia this month, Luke. That's
right.
important as well.
That's right. And that's why, again, at the end of the day, we're very independent here. But you combine the facts that, like I mentioned before, the strait could be closed, the fact that U.S.-China relations probably going to go south because of maybe the Strait of Hormuz being closed. Oil prices probably are going up. Natural gas prices are going up. Then we have heat waves going on in America and Europe right now. And then you have AI demand on top of that. Commodity prices are going up. I love utilities. XLU could be an ETF you could buy. You could buy the direct utilities like NextEra Energy. All these kind of sectors, I think, have so many tailwinds ahead. Getting defensive is sexy right now.
Yeah, defensive, and I wonder if oil is also in that. Eddie, real quick, final word here. What do you want to allocate capital to in this environment of uncertainty?
So I think this uncertainty is going to be very short-lived. So we raised some cash over the last couple of weeks because we actually want to gross our exposure to higher risk assets, discretionaries, small caps, and tech, because we're betting on the Trump tax cuts and deregulation to fuel the second half of this year.
That's a good bet. Thank you, Eddie. Good to see you. Eddie Ghabour. Luke, you're with us all morning, and we appreciate